look so sweaty.
We're sweaty, buddy. This is not going to be your sexiest piece of content.
Where'd you go?
Right there. Hey, someone had to do it one time.
I feel great about this hole.
I love that.
Not my hole. You're my first private equity guest. Can you believe that?
Is that right?
You want to do the most awkward part of this?
Do it to me.
Name and title, sir?
Name and title, Matthew Carlos, principal at New Water Capital. Been with the boys since January 2017, so almost 8 years. Yeah, they spun out of Sun Capital back in 2015, refocused in the lower middle market. You know, Sun got really big, really fast. Great brand in the market, but Jason and Brian wanted to, you know, cut their teeth on their own venture and with us New Water. So it's been fun. The culture's great, and you know, 8-9 years later, we're still very much focused on lower middle market stuff.
Lower middle market, any industry.
Blue collar stuff, as we describe it. So manufacturing, industrial services, packaging, distribution. That probably covers 95% of it. So just true blue collar and markets and industries.
So y'all are finishing out Fund 2.
Finishing out Fund 2.
Starting to think about raising Fund 3. Are y'all looking for deals too, kind of simultaneously while you're
trying to
going
close
out
Fund
to
3?
market?
Yeah, it's like the trick of the trade, right? LPs love to have something to look at that kind of marries up with your strategy. And so we've got a couple in the hopper that'll be a good kind of like piece of red meat for LPs to look at.
First close.
Yeah, exactly. To say, hey, you know, here, dangle the asset out there and say, here's what we did in Fund 2. It's been a good fund. Here's examples of where we've been successful. Here's another asset that needs the same TLC or needs the same opportunity or some love that'll fit in Fund 3 and aligns with our strategy in Fund 2. Right. And you know, for what we do, we're a lot of folks say this, we like to think that we're a smidge different, but we're very operationally focused. And what we mean by that is we hire a bunch of operators that work for New Water. So not consultants, not hired guns, but ex-CEOs, CFOs, COO type folks who work for New Water. And if it's the, you know, the A+ asset that's been owned by private equity, has an A+ management team, systems are in place, M&A has been done, it's probably not the best platform for us. We want to go build something, create something, fix something, improve something.
Plug your people in there too.
Plug them in, yeah, exactly. Run our playbook and like do what we do best, which is, you know, make something better, or build something.
What size are you looking at?
Center of the fairway for us is like between 10 and 20 EBITDA. Yeah, we've done smaller if there's like an M&A strategy, and we've done bigger if there's a lot of conviction.
Yeah,
we can bring in LPs and we can invest more money. Yeah, we're talking about bringing in LPs. So yeah, I mean LPs, you know,
like if you have a deal that's out of your preferred wheelhouse or like bigger,
like size range. Yeah, for us, size range, right? So we'll bring in LPs in who know what we do, who work with us, and they want a piece like the free action, right, where they'll get preferential treatment because they get to participate directly in the deal, cut a bigger check, and also it's actually a good tool for us to use with LPs who want to get in the fund, who have not been in the fund yet, and they get to kind of road test us live.
Dip their toe in on a deal with you.
Exactly. They can participate, they deal with us, our board meetings with us, they see our cadence, they get to know our team, and so it can serve two purposes, really.
How are y'all finding deals?
We're a third. And what I mean by that is we're a third regular processes. So, you know, the traditional middle market investment banks showing us stuff. We're a third limited processes where we'll get a call from a bank and saying, hey, this thing's kind of messed up, to put it nicely, and given that you guys are kind of fixers of things, take a look, dig in, it's something that you guys can add some value. And then a third proprietary, where we'll do a buy-side engagement, or a banker's got a specific rifle shot and he's like, this could be a good fit for you. Or a lot of times we'll buy a company, and during a roll-up strategy, we buy a company, he knows a friend of his that he's been competing with for decades, and he'll say, hey, why don't I call my buddy and bring them into the group. That happens more than you think, honestly.
Great outcome.
Yeah, I mean, we love those when they happen. Those are always the toughest deals, with no banker there to kind of facilitate the flow of data. It's tough.
So market, what are y'all seeing in the market right now?
Market, so interesting year, right? We 23 I think was bad for everybody. I don't think I'm overstating that when I said 23 is a down year after like a crazy hot 21 and 22. Everyone thought 24 was going to be a little bounce back, but it just wasn't. So deal flow for us has been better than 23, but that's not saying much.
What does that mean? Like, is that a number of deals closed?
Yeah.
Is it pipeline that you're
Both.
deals you're looking at?
Both, yeah, all the above. It's better, but it still feels slow. Yeah, it still feels slow. So to finish the thought, I think, listen, this year where we're on now, economy's a little topsy-turvy, right? I think most people would agree. We don't know if we're bouncing off the bottom or if we're going to break through some kind of floor on the general output of the economy. It just feels like no one really knows what's going to happen. Are we trending up or trending down? And combine that with impending rate cut, right? And then the election, whatever that means, I think it still provides like an air of uncertainty in the market. And so unless you've got an A+ asset, I don't know why you'd bring something to market now. You'd probably wait for a little more surety in what's going to happen next.
Yeah, I mean, y'all's position though, you're buying. Do you do many PE to PE deals or?
Not many. Yeah, it's a good point you're bringing up. Like for us, so what is interesting, you look at our deal flow, there is a pretty good amount of opportunity in like, you know, the lower middle market, right? Where it's like the 5 to 10 in EBITDA, maybe like 3 to 10 in EBITDA, like the add-on range or just the smaller deals. And those are the family founder deals where they've gone through a pretty tough operating environment post-COVID, right? The labor shortage and commodity markets and shipping issues and all kinds of stuff. And so they're looking at an asset or their business now and going, you know what? I thought I was going to get 60 million for my business a year ago. Now it's only worth 50 million. But you know what? 50 million is life-changing for me and my family. And so those opportunities still come up where it might not be, like I said, an A+ asset, but you've got something. There's a transaction to do there.
Yep.
So we are seeing some of that. We're seeing it on the lower end of the lower middle market. We see some opportunities, but I will say those are maybe like underbanked or still not very clean assets. They're kind of just, you know, the proverbial spaghetti against the wall. Let's see if someone bites, and if not, we'll bring it back out to market next year.
Yeah.
But we've seen some. Hey, let's just toss it out there and see if we can find a buyer.
Right.
And so there's been a lot of noise in the market, and so I think the rest of the year is going to be slow. I really do. I think there's just too much capital for 25 not to be another incrementally better year than 24. How much? Tough to say, but there's like a record amount of dry powder on the sidelines, debt and equity, and so the capital's there. It'll likely be a feeding frenzy once things pick back up, but I don't see it happening this year.